discuss some of the trends that are occurring in the technology industry. For instance, you know, with the pubcos out there, we're getting so much press about companies being acquired for valuation multiples that keep increasing, such as the acquisition, of course, of WhatsApp by Facebook or Nest by Google. How is this affecting the trends in the early stage and the later Series A's and B's fundings? And any changes in valuations, amounts being raised that you're seeing? Scott, why don't you start?
Well, you know, you bring up WhatsApp. I mean, 99% of the businesses are not WhatsApp.
Oh, yeah. Oh, yeah. And the acquirers are not Facebook.
Or Instagram. You know, I think most of these businesses that are being built over years and, being scaled up regularly. You know, these, outlier examples kind of spoil the market for everybody, and, we get priced out.
Right, because the expectations of the companies is a little, they're in the funhouse.
Well, the entrepreneurs, their expectations also rise.
Right, correct.
Today, if you really ask them what the real value is, it'll be totally different from what they think it is.
Right, especially those that haven't been coached by people. You know, you definitely, they're totally disoriented. And a lot of people are going into trying to build businesses. Well, actually, they're going to ideas without understanding they have to build a business. And there really isn't a business in the early stage. So Steve, any thoughts on that?
Well, valuation is really the key to the whole game. We work with a private company. We're trying to beat them up to get the best value for our investors. Yet when we take it public, we want to get it at the highest value for the company at that time. So many people don't have realistic expectations of what the value is because they'll, try to, and it's just really a negotiation. The best thing for a company is to find the comps and say, well, this is what they're trading at. I say for smaller companies, you always try to describe what you want to be or who you want to be when you grow up, which company. And give and take, but the key to the business is really having one with recurring revenue, which several times today, and stickiness. So what's up? I mean, you must have some stickiness that Facebook thought they'll pay a ridiculous valuation because they can somehow integrate it into their business. But you have recurring revenue and some stickiness, at least you have a fighting chance to get a decent valuation.
Right, and then, you're in the public arena. Your deals can be paper and cash. So it's a mix. So paper is easy to give out if your valuation of your company is really high, like Facebook is. I think that was in the journal, how they accelerated to such a high multiple this year that it was easy for them to increase that valuation. Well, now let's talk about a real deal, where somebody's giving out cash.
And you hit something. When you teach in grad school, the best acquisitions are the ones that are in cash. Those are the ones that usually work. When somebody gives you a lot of paper because their stock's inflated, for some reason, the research shows those don't work out. So obviously, if your stock's hard, you want to use the paper. But the ones that, for any of the young companies that try to sell themselves, try to take as much cash as you can. Take the paper too, but cash is king.
John?
In my case, I have not seen any valuation creep, but then I have a discipline I apply to the business. In 18 years, the formula I established is I don't set valuation, I back into it. I want the founders to give up 20 to 30% equity for the angel round. And that's been consistent throughout my 18 years. I've never seen any creep in the sense, companies that are overvalued, I never see them. They just get flushed out immediately. So for me, that's good. And the rounds have increased though. Up to about 5 years ago, the average angel round was around 250 to 275. Right now, it's gone up to about 650. That's because of the micro VCs and the super angels have come into the lower end of the market. And that's basically reduced the risk factor for me as an angel investor.
That's great intel. Michael, your thoughts?
I'm sitting here listening to everybody else. I think that you need to be realistic about accepting capital. Guys who worry about dilution go bankrupt. You need to have a real underwriter behind you. Raising money through angel investors who are unsophisticated at an inflated valuation usually doesn't get you the capital that you think it will. And if you're undercapitalized, you're going to fail. So you're much better off giving the investor a great deal, getting the capital, and executing your business plan and making yourself richer that way.
Good point. So what about liquidity events? I mean, are you seeing any changes in the last 2 years in liquidity events? Because it's, I've seen the market change, but I want to hear your thoughts. So, Steve, you want to chime in on this?
Yeah, I think the good thing for sort of micro cap and small cap, I said the window's open. Our firm's been doing a ton of IPOs and underwritten offerings, so there's definitely money in the public markets right now for smaller companies. It's always a cycle, and when you see it dry up, and that's usually when there's a lot of risk in the overall market, it gets scary. But right now, no. I mean, if you're a good young company, there's definitely liquidity in the public market.
And John, what are you seeing in terms of your exits on your investments?
Okay. Most angel companies get merged out or bought out, so we're not pursuing IPO type markets. What's occurring in the big scheme is the big corporations are reducing their development budgets, and resources are hard and scarce to find. So on all of my companies, when I do fund them, I ask the companies, tell me who are your strategic competitors, which are the companies that can blow you out of the water, and I tell them, send them your business plan. Okay, and so in other words, I prep the companies that are gonna buy me out from the day one. So all of my companies already have a set of strategic buyers and acquirers, and there's a lot of activity in terms of buying companies at this point in time. It's a lot cheaper for the big companies to buy companies than to do it internally.
Yeah, I'm definitely seeing the same thing. Swati?
Yeah, so liquidity, obviously, just an overview of what John and Steve mentioning, Steve, the environment is very ripe. I mean, it's easy money there, really. I mean, a lot of IPOs happening, and on the private side, a lot of M&A related deals. So, the environment is just, fueling it right now. So how long it lasts, nobody knows, but we see that for sure.
And Michael?
I like the, getting to what Steve said, I like the microcap public markets. I think that the public markets do work. They used to work better once upon a regulatory regime or two ago. But I think that if you have a story that can support the cost of being public, you have access to capital. One of the things that it's a bit beyond the focus of this meeting, but if you can look at the magic that you can create via M&A, where you have someone who's got an installed base of customers, for example, for some of these younger companies, and when you're bringing your magic to it, and you can package it together, the alchemy of that, and especially in the public markets, the opportunity to re-energize the story is very material. And usually these companies aren't staffed where they can do all those things, but there really is some wonderful magic there, and when you start a company, it's so hard. Everything's so hard. If you can get somebody who's got some sort of existing revenue stream where you're applying your technology to it, it could be your magic, if you will. It could be so much easier, and it's a lot easier to raise capital, and it's a lot less risky.
Well, just, I could say from my perspective, I see that I've got three of my companies are exiting now, and two of them are exiting to public companies, and they're barely revenue generating, but they have a magic sauce, and they've got recurring users, and, they're getting deals, and the exits, I'd see companies we would be with them two to 3 years, and now they're with us a year and a half. And they're gone. They're selling, and it's ripe out there. If you've got a magic sauce that is a strategic, especially for a pubco, because they can easily make the deals quicker than companies that need to come up with cash and a cash rich. I want to segue into another area, which would be, connectivity and big data. So a lot of our companies today were about connectivity, connecting with customers, bringing a solution to people. Swadik, you want to start with that one? Yeah, the trend and, where the market's going and how all the early stage companies or mid stage companies are all kind of interrelated, whether it's big data or connectivity.
Internet is obviously powering everything, distribution, data, advertising engagement. So, you're seeing from wearables to smart TV to Internet of Things, which is a big thing that's being used now. Google entered into that field, acquiring Nest, which a few years ago we thought would not even survive in the market. It's doing phenomenally. So, connectivity is very big. It's here to stay. It's getting very smart. It's getting very cheap. We are in the new paradigm, very interesting and very exciting.
Michael, any thoughts on that?
No.
Sorry, not your area. John, I know
No,
you.
somewhat, but, I don't wanna waste the time with them for us.
Okay, so John, I know you're.
I'm talking about even two of my companies, to use some real life stuff. One of my companies, Centrac, is one of the fastest growing companies in the US, grew 1,000% in the last 4 years. It's gonna grow, it's gonna have its biggest year right now. We just won the VA hospital. What the company does is it tracks everything that's in hospitals, doctors, nurses, patients, items, hand washing systems, thermometers, all kinds of stuff. So they're just going completely nuts in terms of revenues and activity. Then I'm a mentor at the RGA Accelerator, which does the Internet of Things. And 2 days ago, I invested in a company called Owlet. It's a baby monitoring company. It's basically a little thing that you put on the baby's ankle, that the baby can do whatever. And all its movements is tracked in the cloud and reported on an iPhone to the parents. We track the temperature, the heart rate, the oxygen level, whether the baby's thrashing, whether the baby goes on its stomach and so forth. The big data we're sharing with research organizations. We're doing it for free, and they're looking at all the data to see if it's predictive, for example, SIDS, or predictive of other types of diseases or maladies. So those are just two companies that are just connected, completely connecting everything.
What was the name of the second company?
Owlet, O-W-L-E-T. The website is owletcare.com.
And so, just let me ask this question, on those companies, would you say that the biggest revenue generator in the future and the potential for a strategic is related to the data collection? Or would it be the product?
Okay, so for Centric, we are collecting massive amounts of data. Right now, we're basically a product selling company. We're a platform company that other people write applications are. For Owlet, we're selling the product. We're giving away the massive data, so we will be selling some of the analytics later on.
Okay. Steve, your thoughts?
Data's key. Almost doesn't matter in your business, if you're getting some kind of data and some business, there's a way to generate some revenue and it's valuable to someone, usually a larger company sometimes, so. It's just that.
Yeah, there you go. I want to open it up to questions. Anybody have any questions for our panelists? Go ahead.
Hi. Thank you. I wonder, just in the context of Long Island, whether you're able to distinguish the Long Island ecosystem and its strengths from Manhattan. Certainly there are a number of initiatives to try to develop an entrepreneurship ecosystem. What are Long Island's strengths? What are we good at in funding and developing new companies?
I'm not from Long Island, this is my first visit here, but I'm from New Jersey, which maybe has some parallels. All the work I do is in Manhattan. I am not doing anything in New Jersey. I've got 4 vestigial companies that were invested in over 5 years ago. And they have all kinds of initiatives, and I have no idea what they're doing or what they're trying to accomplish. That's New Jersey.
Yeah, I would give it, Michael, you want to chime in on this, because you're.
Sure, I think Long Island's strengths are its proximity to New York City, number one. And very bright people from all over the world want to live in New York City. And then they get priced out, or it's not a place where you want to send your kid to school. And X% of them move from Queens, where they were immigrants, out here. And they're very smart, educated, they want to be near their parents. And that's 100% of the locale of Long Island. That's got a beach, when you get to New York City show. So that is our big strength. The negative is the costs are outrageous here. And Long Island's going to have a very difficult time continuing to compete because of the fiscal situation in the state.
Other than that. I said other than that, it's all good.
You got the plus is you got a lot of smart people.
No, you got brilliant people. So.
No,
I'm kidding.
I know, these ethnic groups have moved in historically from the beginning, once the potato farmers, got pushed up beyond Bridgehampton. And they are, these are entrepreneurial people that know how to make money, and it's a huge asset, But boy, oh boy, you sit there and you pay a lot of money for these people.
Well, the younger kids, it's a challenge.
Yeah, I'll echo what Michael's saying. I mean, years ago, Long Island used to be really a manufacturing hub. I don't know what happened to it. It got priced out. The tax structure is absolutely, not conducive to doing business, and people move out. I know I had good clients that had just moved out. So, that's a negative, really. You do have more people, and there's no reason for them, to go elsewhere to look for jobs. There are a lot of clusters being developed all over New York. Long Island's one of them. And if you look at the startup environment here, it's just doing really well. But it needs a lot of help.
Yeah.
It needs help from.
You would only start a business here if you lived here, you couldn't move, right? No one in their right mind would say, I'm gonna put it on Long Island, this is great, I gotta be near my parents or whatever, I'm smart, that's it,
Steve.
Everybody's exactly right. I had a conversation with somebody back in the fall that was running for county executive out here. And he was just telling me, there's no real government push, nobody knows what they're doing to recruit new businesses. I mean, as you heard, this was a manufacturing hub, but there's no incentive for any new tech company or even a big corporate company coming from another state saying, let's go to Long Island. So the sad part is it seems like it starts with the local government out here, that there's just no real business development, business incentives. So that's what I'm told.
We do have, the pockets of Brookhaven National Labs. We have Stony Brook, we've got Cold Spring Harbor, and then we have Lyft, and we have Long Island Angels. But, one of the big challenges is, and we've been actively trying to bring everything together here, is getting a cohesive format to try and help the economy here. What was that?
We never market as a region. Everybody fights for their own domain. We've never done everything collaboratively.
No, that's a good point. What were you?
I traveled down here this morning for my first meeting and joined yesterday before I came down from Fairfield County. In Connecticut, we have a governor who's literally, if you can promise him 100 jobs in 2 years or 50 jobs in a year, he'll give you $2 million. Is there any economic development going on? Because that's how they're flagging it up by us.
Cuomo's got a big initiative and he's been pushing. I mean, everybody knows about New York Startup, but if you analyze it, if you look at New York Startup, the big push is really in Western New York. Mid-New York and Western New York, and that's really where he's pushing to bring the jobs.
And a ton in the Hudson Valley. I go to meetings up in the Hudson Valley.
Right.
And it's amazing the thriving young companies that are getting funding from groups like this and state. So I'm shocked it's not happening here.
Yeah, but it's a fraudulent way, it doesn't really work. Cuomo's initiative's a joke. Look, none of
How
that
do you
stuff
feel
is-
about that?
Look,
I don't want to go out with you on a Thursday night.
I'll tell you what, it's really, none of that stuff works. What you need to do is what you need to do on Long Island is a bunch of things that are that are very simple to say, and I can tell you exactly what we should do, and it's politically impossible, okay? Teachers' unions are sucking the equity out of every person's home in this state, okay? They're destroying capital every day. When it costs $350,000 to educate a child, K through 12 on Long Island, okay? That's what it costs, 24 grand a kid, okay? That's a huge number. That capital comes right out of every productive person on Long Island. And we're wildly productive on Long Island. That's why we make the money we make. But we can do it much cheaper as a society and generate enormous amounts of capital. If you look at your local school district, and you look at how much money they flush down the toilet every year, I'll define flushing down a toilet as the overpaying for mediocre educational results that you get anyway in a third the cost, okay? That capital, take these $100 to $300 million school districts. Imagine if that was invested in local enterprises every year. You know what a juggernaut this place would be?
Yeah, but you can get into a longer discussion, because then you can go into our duplication of our villages and our towns, and, you know, it's just, there's no cohesiveness here. And it could be 20 times efficient, and there was a politician who tried to bring this together and, you know, got shot down. But let's go back to, go ahead.
Well, I've started companies now in 3 states, in California, in Minnesota, and now here, and I will tell you that good entrepreneurs will find a way. No matter how expensive the place is, I'll tell you, Silicon Valley is not much less expensive, neither is Boston, neither is Manhattan. The issue here is really innovative culture. And the labs are great, but they're really doing very early work. A lot of that stuff isn't commercially ready to roll out yet, so it's pure research funded by the government, which is wonderful, but it's 10 years from being anything usable by a business. What's needed here is access to capital on an island, because Manhattan seriously does not come to Long Island. I don't care about proximity, it doesn't come here. The leaders that build companies, the entrepreneurs, there are some, but not enough, because a lot of the industry has left. The young people leave after they graduate college, so a lot of intellectual capital leaves. And so from my perspective, what I would love to see here is that ecosystem, and a lot of it is gated by the professional services providers, the CPAs and the attorneys and the people that provide support to us to help us meet these folks, build our connections, help us raise the capital, build that kind of, you know, innovation culture on Long Island and open it up, because there's plenty of money here. It's just not investing in anything other than people's own businesses. There's a lot of mom-and-pop operations here. And, you know, it takes time. But I think Long Island has a hell of an opportunity to do that if it's willing to be patient and willing to make some investments in doing so. And groups like Thoughtbox that Mark Fasciano started, and groups that like Launchpad are a great start, but they're small, and that effort needs to grow exponentially on Long Island to get us anywhere near any of the major innovation centers, even Manhattan, which isn't that far away.
No, you're absolutely right.
Having been fortunate enough to live on the West Coast for a while in the Silicon Valley area, I've got to do, I'm able to do some comparisons. And it's certainly no less expensive to do anything out there. You probably have seen the latest information with all the young people who bus down from the city because that's where they want to live in the expensive rents. But I'm in Launchpad, so I think it's a great idea. However, if you could think of Brooklyn as being part of, at least the geographic part of being Long Island, I think Brooklyn is an incredible opportunity. They're building 155,000 square foot space there right now that's specifically for tech. I think you're going to be able to bring in and retain those young, very smart people that we're all looking for, and give them the amenities associated with being in an urban area and having everything they need as a young person. I don't know if that's moving away from supporting Long Island or somehow embracing it, that it's that much closer to Long Island.
Well, yeah, between Manhattan and, you know, if you go to the west side, you've got these, you know, buildings and facilities that are housing all these tech startups that used to be warehouses. They're massive. You know, on Varick Street, and then you've got down in Brooklyn, like you said, you got Dumbo, and then you got there's another facility that's purely related to food and beverage that was started up. So there.